Hi everybody, Katy Mackenzie here in the TMG studio with Adam Brown. He's the owner of Vanguard Accounting and he's here today to answer all of our favorite tax-related questions.
Tax, fine.
Welcome to the studio.
Thank you.
Adam, our first question today is around why we don't want to write our income down to zero. Like what the reasons are around that.
Yeah, and obviously people want to write down their income as much as possible to pay less taxes. Makes sense. Unfortunately, that is a very short-term decision that would help you in that year, but may put you in not a great situation long-term for your life and your family.
So an obvious one in our world, my world, is that if you're writing your income down to zero and we're trying to get you into an income qualified mortgage product, now you have no income showing. So you sort of put yourself in a different bucket of lending, perhaps at higher interest rates. So that's an obvious for me as it relates to mortgage financing. But what are some of the other reasons to not write off all of your income down to zero?
Yeah, that was the prime case. Usually that's the biggest purchase that everyone, that an individual is having in their life. And they need a good couple years of proof of that. But some other reasons, if you're writing down your income down to zero in your business, the CRA might assess that business is actually a business, and they may look at all your expenses. And so how far they go into those, it depends, but you may lose a lot more deductions.
So it could trigger an audit.
Exactly, and with an audit comes more time, comes more money, and penalties. So that's kind of primarily the biggest one. The other side is like retirement and planning for retirement. If you do not have income, you do not get a contribution space for RRSPs, and that might affect the home purchase if you're going to use the home buyers program.
Yeah, exactly. Under the home buyers program, people do look, more so even now since the government's increased that contribution limit, but if you're not declaring earned income, then that RSP contribution room isn't available.
Yep. Yeah, and as I mentioned too before, it takes a couple years. So it's not something you can change on the fly.
Yeah.
It takes some forward planning.
I know a lot of my clients speak to sort of a measurement of success of their accountant as to how little income tax they pay. And I say, you know, if you've asked them to do only that and just that, well, then maybe they've done what you've asked them to do, but always best to have a plan and a strategy in place with the professionals that you're working with. So accountant, mortgage broker, lender, lawyer, whomever is involved in your transactions as you're doing your financial planning.
Yeah, I definitely think that's very important. And with most of my clients, we have a conversation. And what's your plan 2 years from now, 3 years now, 5 years from now? And you need to know those things. I need to know those as your accountant to properly advise you on to what to do, and maybe are we taking deductions or not, or how are we doing things. So lowering income tax is not the only predictor of success, I would say, of your accountant. I think it's that relationship that's most important, and then understanding your situation and giving proper advice for that.
So if you do have any other questions, we've piqued your interest, do feel free to reach out to Adam. Adam, how do our listeners get a hold of you?
The best way is through email, adam@vanguardcpa.ca.
And we will put all of his contact information in the show notes. But thank you for being with us today.
Thank you for having me.
And thank you for watching. We'll talk to you soon.
Bye now.